Yesterday, INR performed really well and surprised most market participants. China's reopening supported sentiment and lifted Asia's currencies against the dollar. However, Indian traders are cautious in selling the dollars as the US Federal Reserve continues to promise hikes and the global economic outlook is bleak. US Federal Reserve Chairman Jerome Powell, in a speech in Sweden on Tuesday, refrained from commenting on the rate policy. Fed Governor Michelle Bowman said that the US Central Bank will have to raise interest rates further to control the high inflation. San Francisco Fed President Mary Daly, in an interview with WSJ's journalist Nick Timirao, said the US economy is expected to continue slowing in the first quarter of the year. The Fed is data dependent and could change their outlook if the economy evolves differently than expected. The goal is to restore price stability. In today's video, I'll try to summarize this interview. The Federal Reserve's Summary of Economic Projections, also known as the SEP, in December projected higher inflation than the Consumer Price Index in October and November. This was due to supply chain disruptions causing the inflation to remain higher than expected and core services inflation not coming down quickly. Throughout this interview, Mary Daly has mentioned core services for 6 times, so I'll try to explain this in a bit. The inflation dashboard is split into 3 buckets: goods and energy, housing, and core services excluding housing. Goods and energy has gone up and now is down. Housing hasn't improved yet and will take time. But the core services excluding housing, that is the wage market or the labor market, is the most important for overall the inflation and is yet to fall. The labor market is currently in an imbalance with more demand for the labor than supply. This is expected to slow as demand and supply come into balance. The Fed is not ready to declare victory on inflation and the labor market yet, as the economy is still out of balance. The Fed wants to bring the economy back to 2% inflation target so they don't have to worry about the inflation every day. Heading into the next meeting, the decision between the 25 or a 50 basis point increase will depend on the incoming data. She supports the goal of interest rate above 5%, however wants to be data dependent and not wall off a 50 basis point increase. She said the Federal Reserve will be carefully analyzing the upcoming CPI data. They will be looking for the decrease in the headline number as well as the improvement in core services and the wage growth. The Fed is projecting an unemployment rate of around 4.5 to 4.6% this year. As per her, this rate is not out of historical norms and is expected to be a temporary phenomenon. Before the end of the interview, Mary Daly once again mentions that the labor market needs to come back into balance, which can be done by firms slowing their pace of hiring rather than laying workers off. This will help to prevent the unemployment rate from rising rapidly.